What's up everyone, and welcome to today's video where I'm going to be teaching you the easiest ICT strategy to get you funded, which you don't even need a daily bias for. Of course this helps, but it's definitely not required. You will have seen ICT refer to this as the silver bullet, and if you don't know, then today you're going to learn a simple strategy to get you funded very quickly. So for this strategy we have 3 rules we have to lay out. First of all, the fair value gap we trade from has to occur inside the 10 to 11 AM window, New York time. Secondly, we must be trading ES or NAS 100. And thirdly, we must form the fair value gap on a 5-minute chart. So let's take you down into this example here, where we have 10 AM New York time marked up. And as the rules say, we're going to be looking for a fair value gap to form on the 5-minute chart. Take forward, we can see we've got a push up, and then we are anticipating a gap now. We have a gap which isn't valid until this next candle closes, and then the candle closes. So let's mark up our gap here. And what does the rule say? We must have it form on the 5-minute chart, which we're on, inside this 10 to 11 AM window. This is the silver bullet fair value gap. Have our stop below the bodies of this candle, and we'll target up into this fair value gap and above these highs. Very simple strategy. As you can see, we've got a tag. We dug past the fair value gap, which is still a valid entry even though we dug into this order block, and then we shoot past into our take profit. So with the next example, you can see price has been consolidating over here, and we have our 10 AM window. We also on this day have news, so we're expecting a big momentum push either upside or downside, and we'll capitalize on the silver bullet fair value gap that forms. As you can see, news takes us lower, and then we have this big gap inside here. I would use this low to this low. Let's mark that up, and that is our silver bullet fair value gap. As why? Because it formed inside the 10 to 11 AM window. Let's place our sell limit there, and you can put your stop loss at the big at the top of a large gap, so we don't have to put it at the highs, we can just leave it there. I'm going to aim for around a 1 to 1.5 on this one, just because the news has already taken us quite low. As you can see, we wick in, build lower, and then finally come down towards our TP. So as you can see, this is easily the most simple strategy about, and it requires about 3 rules which are very easy to follow. This strategy is very hard to get wrong, and that is why I say it can definitely get you funded quickly. Now again, let's move to the next day where we have 10 AM marked up, and let's remember what we're looking for. Fair value gap to be created. It doesn't matter how small it is or how large it is. Once you have the strategy, as you can see here, let's enter off of this and let's go for a 1 to 2. Stop loss below the body. 1 to 2. See how it plays out. Wick straight to TP. This is the mechanical strategy that can get you funded. It's simple, it doesn't require much thinking, and the bonuses of a mechanical strategy are the fact that you know when a setup, you know when your setup is valid. Whereas when you're trading off intuition, sometimes the setup may not look like a good setup to you, and you may not take a trade based off of that. However, when we have a mechanical strategy like this silver bullet strategy, we know that if a fair value gap forms in between this time frame, we are getting in the trade. So just taking you into the final example, as you can see here on NAS, we've had a nice move up already. That doesn't matter because we're working with a mechanical strategy. 10 AM opens up, we have the fair value gap created, price wicks into it and runs much higher. So taking this trade, we would have entry there, stop above the candles, low that creates the fair value gap, and aim for a fixed RR of 1 to 2. It just goes to show how when you have a mechanical strategy, instead of basing it off intuition completely, or at least one mechanical model, you can take trades like this and not have to worry about whether you're getting in or not, or not have to worry about your psychology when entering a trade. Before we end, I wanted to talk to you about this point right here and emphasize what my beliefs are on risk to reward, especially regarding this model. So in terms of this silver bullet model, I think a 1 to 2 fixed RR is perfect, because granted we may lose some, but the ones we lose will not be nearly as big as our winners, of course half. However, when people aim for RR, they don't think like that. They think that a 1 to 8 RR is fine and realistic, when in reality, in this market, we have to take whatever the market gives us. And when we have a 1 to 2 RR with just a 50% win rate, this strategy has a much higher win rate than that, which I've discovered through backtesting and a bunch of other things, other people using the model. Just a 1 to 2 RR 50% win rate, 10 trades a month is 10%. So to put that into perspective, on a 100k account, 10 trades a month with all of these parameters, just using this strategy every day on the same pair, same time frame, same everything, that would be $10,000 on a 100k account. After your profit split, that's about $8,000 you're taking home a month. Of course, this is if you're, taking a lot of trades. If you take less trades or even lesser RR, then this is going to look different, but you're going to be making minimum 5% a month. So this is exactly why I wanted to keep this video short, just drop the strategy and leave this thought with you here. And I'll ask you now, if you enjoyed the video, please do like and subscribe. Be sure to comment any thoughts or any feedback you have. Turn post notifications on, because as you can see, I'm uploading much more. This is consistent now, and this is what I'm trying to do, is help you all to become better traders. So I hope you all enjoyed, and thank you for watching. I'll see you in the next one.